Alright, GM everyone. OXNC season here, and this is going to be the first video in the Algo range method, aka RAM series. So first and foremost, we want to dissect what we mean by Algo range method. Algo here stands for Algo market structure, and range here stands for range. Basically, range here stands for range. So, what we are trying to do is to use the Algo market structure inside an established range. What we mean by an established range is this: if we can have this range from low to high, low here to high, and we are shown now, or we are setting to a degree that price should not take out this particular low here. So we now have this particular range to work with. So we have from range low to range high, range low to range high, and here we have the midpoint of this particular range. So the basis of trading is having an established range and looking for opportunities in a point where the range is not yet violated, and the trade opportunity will take us to the external part of the range. So basically, when we're inside a range, we want to take out internal range liquidity. That's why it's called internal range liquidity, to get to the external range here. So we take out internal range liquidity, or we purge internal range liquidity from this zone, and then we head to take out external range liquidity from here. So in this first video, we're going to be looking at what is how do we establish ranges in the market, because when we have a particular range formed, it's at that point now that we know where the market should not trade below. The range will establish points where the market should not exceed. So once we have an established range, we don't expect the market to exceed that particular point. And what we use to establish range is structure. Structure gives ranges, because when we have this particular structure, for example, in a buy trend or an uptrend. So an uptrend basically is when the market is forming a series of higher highs and higher lows, higher highs, higher lows. So when we have this, what we have is what at every break of structure, we are creating a new range, and the new range is not supposed to be violated if structure would continue to the upside. So we have our range low, range high to range low. If structure would continue to the upside, this low should not get violated. So our trading opportunity is basically looking for where we can catch this higher low here and possibly ride that particular move to create another range, again taking out external range liquidity. So typically what happens is that the market, when we create a range like this, we can go on to create internal range liquidity, protecting this very low here. Then we go on to take external range liquidity. Of course, this is also true for a downtrend. When we're going trending lower like this, the market forms a lower high here, and we're anticipating a lower low being formed. So prior to this lower low being formed here, after this break of structure here, what we have is an established range from range high to range low. Price will tap into premium or tap into this position here, and then we sell off to the downside. We sell off to the downside, and if the market continues being bearish, we should expect to have this price action form until we have a break of structure to the upside, which means we have departed from this particular downward trend. So the ranges holding to the downside will fail, or we no longer have a tradable range to the downside, and then that is what we call a higher time frame break of structure. And typically, first break of structures are called change of character, CHOCH. Change of character. This means that the market has changed its character from being bearish to bullish, or being bullish to bearish, as the case may be, right? So basically, all we need to do is to find a way to find ourselves inside of a range that should hold price, and then we're looking for buying opportunities in the discount of the range to take out the external range liquidity, right? So that is what the range in the algo range method means, because we're looking for a way to be able to use ranges to our advantage. So we want to use ranges to our advantage. Of course, you cannot just be buying when we get to discount of the range. That's where algo market structure comes into play. So the algo market structure is very similar to QMR, because a QMR is also very similar to head and shoulder pattern. The basic retail patterns show us head and shoulder pattern. We have two shoulders, then one head, and typically once price takes this baseline here, you can always begin to look for shorts when you're trading the head and shoulder pattern, because it is a strong reversal pattern in the market, right? So typically, from typical retail, head and shoulder patterns are very strong reversal patterns. So the head and shoulder pattern is what SMC or smart money traders eventually called QMR, right? So we have, it is basically the same thing. Head and shoulder pattern is also called the QMR, which is short form rather for Quasimodo reversals. So QMR is short form for Quasimodo reversals. Basically, what we have is price violates a resistance level like this in the market, and also this supply zone, or the support that pushed price to take out this resistance zone. We want to see that supply get taken out too. Then we now have price retrace into this zone here, then we sell off. However, if we want to trade it right where we got the algo market structure, it's just adding liquidity to this whole mix. So when price takes this out, we want to see some sort of liquidity form and being taken by the market. So the difference between QMR and the algo structure is just liquidity here that was formed in the market. It's just liquidity that forms in the market. That's basically the difference between the QMR and algo structure. So of course there are the different type of algo structure. In the subsequent YouTube video, I'll be treating algo structure differently, the type of algo market structure, how to identify valid algo market structure, which ones work and which ones don't work. So we'll be looking at that in the subsequent video, but this is just an overview. This is an overview. So what does the algo range method do? The algo range method is basically, we're looking to find where we should see our algo range, our algo structure rather, inside the discount or premium of an established range. So we need to see an established range, aka we need to see the market give an established range where price should work towards. So basically, when we have a range, like we said earlier, we have a range, market would leave internal range liquidity here, or form internal range liquidity like this, and price will take this internal range liquidity, then we're headed for what? External range liquidity. So external range liquidity are typically formed below old lows in the case of a bearish trend like this. So we form IRL. So basically what the market does is it moves from internal range liquidity seeking external range liquidity. So the market will move from internal range liquidity, and where do we seek external range liquidity? So we form internal range liquidity up here in premium, where the market is supposed to continue to form a lower low here. So we take our internal range liquidity, then we head for external range liquidity. When you flip this to being a bullish example, you would also see similar to this. Market break structure, we come on to form internal range liquidity here. The market will take this internal range liquidity, then head for external range liquidity. So even if you don't trade algo market structure, you can use this to be able to get your draw on liquidity. Right? Even if you're going to be trading a system that maybe uses change the state of delivery or order block or whatever system you use, you can always use this to be able to determine your next draw on liquidity. Because when price has gone to take out this internal range liquidity, first target obviously are this external range liquidity resting here. Then of course this overall external range liquidity we see here. So we want to go obviously from IRL to ERL. We want to go from IRL towards ERL. So when we look for this established range, then we begin to look for our setup forming on the lower time frame. By lower time frames here, we mean the H1 time frame and H4 time frames, because we establish our ranges from the weekly time frame. So once the weekly time frame has given us an established range, we then wait for the H1 or H4 to give us our algo market structure right in the positions where it's supposed to be working, right? Because if you pick the algo market structure in isolation, it would not work, because basically you're just looking for a pattern, and obviously patterns do not move the market. Logic does. Where price is supposed to react, where price is supposed to buy from, where price is supposed to sell from, those are the places you're supposed to engage price. For example, if at this point here you begin to see an algo market structure that tells you to sell this market from this zone, it's most likely not going to work, because we just finished a retracement and a continuation to ERL is what we have in play. So because of that, it will typically not work, and you're going to get stopped out here. You're going to get stopped out because you're trying to what's it called now? You're trying to go opposing the higher time frame trend. So these whole ranges will make you to find yourself in the higher time frame direction or the higher time frame trend, the current trend in the markets, right? So let's look at examples of this where we just break structure of the weekly time frame, we come up into premium or discount as the case may be, then we look for our setup using the algorithm method. So this is just alright. So let's look at USDCF. If you're not in my Telegram channel, the link to my Telegram channel is going to be in the description of this video. Do well to join my Telegram channel, because this particular trade of USDCF was shared on my Telegram channel for free before it played out. So I don't know why the chat's taking so long to look. Anyway, so if we look at USDCF, we want to see the established range that the market is forming. We want to know what range the market is forming. Then we're going to take our drawings. Let's go to the weekly time frame. We want to know what range this market is forming, what range do we have in play, and how do we get ourselves involved. Now this is around what now, August, July, thereabout. You see this high here. What this high does, what this high proceeds to do is to break structure here on the weekly time frame. So right now we have an established bearish range. with this range we do not expect this place to get taken out if this market will maintain bearishness. Now the market might not maintain bearishness and take it out, and what will happen is that you're going to have what, a losing trade. Yes, you're going to lose trades because sometimes the market will change direction and your loss is going to be what would indicate that particular change of direction. But it's most likely going to continue working. Once we have another break of structure, we continue playing this, or if we now break structure here, we keep playing this. In essence, we just need to have an established range, bullish or bearish range. Here we have an established bearish range. So when this established bearish range is formed, this is what we have schematically. We have to come to this high here and take out this low, which you see happen here. So at this point, when we go to this zone here, we go to the H4 time frame to begin to look for our algo market structure. We want to see our algo market structure showing us that price is going to continue to the downside, because price could continue breaking structures like you see here. Break structure, break structure, break structure, we would not be interested in this trade. But then price goes on to form our algo market structure. Here we have what, the structural liquidity in place. We have our failed order block here, and then we have our sell entry. Now typically you can look for a sell entry from this zone to form the lower low on the weekly time frame. This will give you more risks to reward, but this will require you to hold a trade for a very long time, and you also stand the risks to get stopped out if the market does a quick reversal. So typically what I do is just look for a 1 to 2 hour trade, so I'm in and out of the market as quick as possible. Then of course the market would now give follow-up entries. So the thing is, when you have your bias already in place, which the ranges will give you a good bias, you can now begin to take other trades in that same direction in line with the draw on liquidity. Remember, our draw on liquidity is down here below. So if we are able to have an established range and price is now headed towards that draw on liquidity, you can now afford to take trades using the algo market structure as we approach that draw on liquidity. As you can see here, we have this guy here and we have this algo structure here. This is our protected low, a protected high in this case. Then price taps into it and boom, we sell to the downside. So all of this move is in essence, we are moving to form this lower low here. Then once we form lower low, you can now stop taking your sell entries. Definitely I just look for my 2 hour like this. I'm off the market. Let's also look at USDJPY. Let's look at AUDCHF. This is a very recent trade from a couple of weeks ago. AUDCHF, 2 sells on AUDCHF. Let me proceed to remove joints. Currently on an AUDCHF trade at the moment, but let's remove joints and see how we're able to establish this particular trade here. So like the other case, we need to have an established what range. In this case, we have an established bearish range, which means that what, this high that caused this break of structure should remain protected. We should not take out this high. In essence, we should have something like this, right? In essence, this is what we should have. We should have this high here from. It should not get taken out. So when we're marking out our structure, it should be something like this. We shouldn't take it out. We should continue the bearish move to the downside. So because of that, I have to now come to this particular zone on the weekly time frame and begin to look for short entries. But I would want to see what the algo structure forming on the 4 hour or the 1 hour time frame. So first of all, I saw the break of structure. I'll do a different video treating the algo structure, right? Treating the algo structure properly, what validates an algo structure, invalid and non-valid and invalid algo structures. So when I saw this form and I saw structural liquidity here, I shared the trade on Telegram. I would attach the what's it called now, screenshot to it here. Share the trade on Telegram. This protected high here. Then I spotted another re-entry here with this guy at structural liquidity, and price should typically go to take out this low because this is the current draw on liquidity. Price should come to take out this low to complete the downtrend on the higher time frame. So that was why when I spotted this particular trade also, I am in on this trade on AUDCHF. I'm in on this trade of AUDCHF. This is my protected level at this point here. So this is my third. This is the first trade on AUDCHF here. Typically, I just look for 2 hour because sometimes the market can reverse and go back up, or you have to hold on to a trade for such a long time to hit your take profit. Because of all those reasons, I love to just target 2 hour on each trade idea. Then I move to the sidelines waiting for another trade to form. Right, then we have our 2 hour here. So I'm already holding this particular trade, held it over the weekend to the new week currently forming. So this is how you establish your ranges, and you use the algo range method to get your sells, buys, depending on the scenario being presented. Of course, there was a particular sell on US30. This is going to be the last example, so this doesn't get into a very long video. Let me remove drawings here. So we look at this range here that we have established on US30. You can see the price book structure here, which means that this high should remain protected. That means when price gets to this point, we can begin to look forward our algo range, our algo structure to take us to this downside here, which is to take out this liquidity here. Once price takes out this liquidity, we are now done with that range. Then we can look for retracement upwards or stuff like that. So price got to this zone here. What do we see on this market? We see that price book structure telling us we now want to start going to the downside, give another break of structure. There is no algo setup here. Price took this liquidity and moved to the downside. Now after price did this, we now have what our algo structure here, taking us to this draw on liquidity. We have this what structure here that is currently what taking us to that draw on liquidity. So this was a what sell here, first sell on US30. From this zone, you look for a 1 to 2 hour trade idea. Then price presents another sell-off on US30. Yeah, from this zone, still using the algo structure. Then of course that brings us now to the current sell that I'm currently looking out for on US oil, rather not US30, US oil. So price has been selling. So once you have your external range established, you can now begin to look for sells in that same direction of your external range liquidity. So I have now this place as my stop loss. Look for 1 to 2 hour trade here, pending when we take out this point, which is our external range liquidity. External range liquidity here. So yeah, this is a basic rundown of what the algo range method is all about. This is just the first module on the algo range method. In subsequent modules, I'll be teaching how you're able to draw your range, establish your range, then different other ways where you can play ranges, and also how to trade reversals using the algo range method. So do well to like this video, subscribe to the channel, and turn on post notifications so when I drop videos you don't miss out on them. And also drop a comment so the algo just recommends it to other traders who might be interested in watching this video. Peace out guys. Sincere out.